Right now, while you're watching this video, $4.5 trillion is silently moving from one generation to another. And here's the kicker. If you're under 40, there's a 92% chance you're on the losing end of this transfer. But don't click away yet, because in the next few minutes I'm going to show you exactly how this wealth reset works, who's really benefiting from it, and more importantly, the 3 moves you can make starting today to end up on the winning side. Stick around because what I'm about to reveal might completely change how you think about money and your financial future. Hey there, I'm Dave, and welcome to Dave Invests Smart. If you're new here, hit that subscribe button right now because we're about to dive deep into something the financial elite don't want you to understand. Let's start with a question that's probably been bugging you. Why does it feel like no matter how hard you work, building wealth seems impossible? Your parents bought a house at 25. You're 32, making more money than they ever did, and you can't even afford a down payment. What changed? The answer is going to shock you. And it starts with understanding the greatest wealth transfer in human history that's happening right under our noses. Here's what's really going on. Between 2020 and 2045, baby boomers are expected to pass down approximately $68 trillion to younger generations. $68 trillion. That's more money than the entire GDP of the United States and Europe combined. Sounds great, right? Wrong. Because here's what they don't tell you. Only 30% of Americans will inherit anything at all. Let that sink in. 70% of people watching this video right now will receive absolutely zero from this massive wealth transfer. But it gets worse. Of that 30% who do inherit something, the majority will receive less than $50,000. Meanwhile, the top 10% of inheritors will receive an average of over $1 million each. We're not just watching a wealth transfer. We're watching a wealth concentration event that's going to reshape the American middle class forever. Now, you might be thinking, okay, Dave, so some people inherit money and some don't. That's always been true. What's the big deal? Well, here's where it gets really interesting, and this is the part that should terrify you. This isn't just about inheritance anymore. The entire economic system has been restructured to amplify this divide. Let me explain. Let's talk about the housing market first because this is where the reset is hitting hardest. In 1980, the median home price in America was $64,000. The median household income was $21,000. That means the average house cost about 3 times the average annual income. Fast forward to today. The median home price is around $420,000. The median household income is $74,000. That's nearly 6 times the annual income. The math doesn't math anymore. But here's the truly insane part. It's not just that homes are more expensive relative to income. The entire system of homeownership has become a mechanism for wealth transfer from the have-nots to the haves. And I'm going to prove it to you right now. Think about who's buying houses today. According to recent data, 43% of home purchases in 2023 were made by investors and corporations, not families. Let me repeat that. Nearly half of all homes sold went to investors and corporations. These aren't people buying homes to live in. These are entities buying homes to rent back to you at a profit. Now, here's where it connects to the great wealth transfer. Who has the capital to compete with these corporate buyers in bidding wars? People who inherited money. If you're a first-time buyer trying to save up a down payment from your paycheck, you're competing against someone who just inherited $300,000 from their grandparents' estate. You're bringing a knife to a gunfight, and the system is designed to keep it that way. Let me show you how. When you save money for a down payment, you're saving after-tax dollars. You work, you pay taxes, then you save what's left. But when someone inherits money, they pay little to no tax on it in most cases, especially if it's under the estate tax threshold of $13.6 million. So the inheritor starts with a massive advantage before the race even begins. But wait, there's more. Once you do manage to buy a house, you're paying a mortgage with interest rates that are currently hovering around 7%. Meanwhile, the wealthy inheritor might buy the house in cash, or if they do get a mortgage, they get better rates because they have more assets and better credit scores. Over 30 years, that difference in interest rates alone can cost you hundreds of thousands of dollars. Money that flows from your pocket into the financial system, widening the gap even further. Now let's talk about what happens after you buy that house, because this is where the psychological reset really kicks in. You're now what they call house poor. Sure, you own a home on paper, but most of your income goes toward the mortgage, property taxes, insurance, and maintenance. You can't invest in stocks. You can't start a business. You can't take risks. You're locked into your job because you need that steady paycheck to keep the roof over your head. Meanwhile, the person who inherited wealth buys their home outright or with a massive down payment. Their monthly housing costs are minimal. They have freedom. They can invest in the stock market. They can start businesses. They can take the exact risks that build generational wealth. See the pattern? The system doesn't just transfer wealth once. It creates a compounding advantage that grows over time. Let me give you a real-world example that'll make this crystal clear. Meet two people, both 30 years old. Person A didn't inherit anything. Person B inherited $200,000. Both make $75,000 a year. Both are smart with money. Let's see what happens. Person A spends 10 years saving for a down payment while paying $1,500 a month in rent. That's a total of $180,000 paid to a landlord. Gone forever. After a decade, they finally buy a house with a 6% down payment and a 7% interest rate. Their mortgage payment is $2,500 a month. Person B uses the inheritance as a down payment immediately, buying a similar house at age 30 with a lower interest rate because of the larger down payment. Their mortgage payment is $1,800 a month. But here's the kicker. Person B also has an extra $1,500 a month that Person A was spending on rent. Over those 10 years, Person B invests that money in index funds averaging 8% annual returns. Fast forward to age 60. Person A has finally paid off their mortgage and owns their home outright. That's it. Person B not only owns their home outright but also has over $1.2 million in investment accounts from that 10-year head start. Same income, same work ethic, completely different outcomes. That's the wealth reset in action. Now, I know what some of you are thinking. Dave, this is depressing. Is there any hope for those of us who aren't inheriting millions? And the answer is absolutely yes. But you need to understand the game being played so you can make different moves. And that's exactly what we're going to talk about next. But before we get there, if you're finding this valuable, do me a favor and hit that subscribe button. We're breaking down the financial system every single week, showing you exactly how money really works and how to build wealth even when the deck is stacked against you. Seriously, subscribe right now. You'll thank me later. Alright, so how do you win in a rigged system? The first thing you need to understand is that the wealth reset isn't just about inheritance. It's about access to assets that appreciate. The rich get richer because they own things that go up in value: stocks, real estate, businesses. The middle class stays stuck because they own things that go down in value: cars, electronics, consumer goods. Or worse, they own nothing at all, just renting everything and building someone else's wealth. Here's your first move, and this is critical. You need to become an asset accumulator, not a stuff accumulator. I don't care if you can only invest $50 a month right now. Start investing in assets immediately. Index funds, fractional shares of stocks, REITs, which are real estate investment trusts. The key is to start building your portfolio now, even if it's tiny, because time in the market beats timing the market every single time. Let me show you why this matters so much. If you invest $300 a month starting at age 25, earning an average 8% return by age 65, you'll have over $1 million. If you wait until age 35 to start investing the same $300 a month, you'll have less than half that amount. That 10-year delay costs you over $500,000. The wealth reset punishes delay. Here's your second move, and this one is going to be controversial. Stop prioritizing homeownership as your only path to wealth. I know. The American dream is to own a home, but here's the truth they don't want you to know. Homeownership is only a wealth-building tool if you buy at the right time, in the right market, and if it doesn't prevent you from investing in other assets. If buying a house means you have zero money left to invest in stocks or businesses, you might actually be making yourself poorer. I'm not saying don't ever buy a house. I'm saying run the numbers. Calculate what renting costs versus buying in your specific market. If renting is significantly cheaper, rent and invest the difference. Build your investment portfolio first, then buy a house when you have real wealth behind you. This is exactly what the inheritor class does, by the way. They don't rush to buy a house with all their money. They diversify. They invest in stocks, bonds, real estate, businesses. They understand that wealth comes from owning a diverse portfolio of appreciating assets, not from sinking everything into one property. Here's your third move, and this is the most important one. Increase your income aggressively. Look, I can give you all the investing advice in the world, but if you're only making $40,000 a year, your wealth building is going to be slow no matter what you do. The math is simple. The more you earn, the more you can invest. The more you invest, the faster your wealth compounds. But here's what most people get wrong. They think increasing income means working harder at their current job and hoping for a 3% raise. That's not going to cut it. You need to develop high-income skills. Learn to code, master sales, become an expert in digital marketing, start a side business. The goal is to double or triple your income over the next 5 years. Sounds impossible? It's not. I've seen countless people do it, and the ones who succeed are the ones who treat their income like a business, always looking for ways to add more value and capture more of that value as earnings. Now let's talk about the elephant in the room. What about the people who are going to inherit wealth? If you're one of the lucky 30%, congratulations. But here's my advice, and this is crucial. Don't count on it. Don't wait for it. Build your own wealth as if the inheritance isn't coming, because there's a very real chance it won't be there. Why? Healthcare costs in retirement are astronomical and getting worse. The average couple retiring today will spend over $300,000 on healthcare in retirement. Long-term care facilities can cost over $100,000 per year. Many boomers are going to spend down their entire estates on medical care before they pass. That inheritance you're counting on might evaporate into hospital bills and nursing homes. Plus, we're living longer. Your parents might live into their 90s or beyond. Do you really want to be 60 years old, still waiting for an inheritance to start building wealth? Build it yourself now. If the inheritance comes, great. It's a bonus. If it doesn't, you're still financially secure. Let me hit you with some even harder truth. The wealth reset isn't just happening through inheritance. It's happening through every single aspect of our economic system. Student loans are a wealth transfer from young people to financial institutions. Credit card debt is a wealth transfer from consumers to banks. The entire gig economy is a wealth transfer from workers to platform owners. Even inflation is a wealth reset tool. When the government prints money and inflation runs hot, who benefits? People who own assets that inflate in value. Stocks, real estate, commodities. Who gets crushed? People living paycheck to paycheck whose wages don't keep up with rising costs. Every single month that inflation outpaces your wage growth, you're getting poorer in real terms. That's the reset at work. The financial system is designed to extract wealth from the middle class and concentrate it at the top. It's not a conspiracy theory. It's basic economics. The people who understand how the system works can use it to build wealth. The people who don't understand it become the fuel that powers someone else's wealth building. So what's the bottom line here? The great wealth transfer is real, it's massive, and it's reshaping American society right now. If you're not inheriting wealth, you're starting from behind. But here's the good news. Understanding the game is the first step to winning it. You can't control whether you inherit money. You can't control housing prices or interest rates or inflation, but you absolutely can control how you respond to these realities. You can choose to become an aggressive saver and investor. You can choose to increase your income. You can choose to educate yourself about money and assets. You can choose to play the long game and build generational wealth for your own kids, even if your parents couldn't do it for you. The wealth reset is happening whether you like it or not. The only question is, are you going to be a victim of it, or are you going to be one of the people who figures out how to thrive despite it? I'm betting on you to be in that second group. That's why you're here watching this video instead of scrolling through nonsense on social media. Here's what I want you to do right now. First, subscribe to this channel if you haven't already. Every week we're breaking down exactly how the financial system works and how to build real wealth. Second, go open an investment account today if you don't have one. I don't care if it's Robinhood, Fidelity, Vanguard, whatever. Just open it and put in your first dollar. The psychological shift from being a consumer to being an investor is massive. Third, commit to increasing your income this year. Pick one high-value skill and master it. Take a course, read books, practice daily. Make yourself more valuable in the marketplace. The great wealth transfer is the challenge of our generation. But challenges create opportunities. The people who understand what's happening and take action are going to build incredible wealth over the next 20 years. The people who complain, make excuses, and wait for the system to change are going to get left behind. Which one are you going to be? Drop a comment below and let me know what your first move is going to be. Are you going to start investing, focus on increasing your income, change your relationship with homeownership? I read every single comment and I want to hear from you. Thanks for watching. I'm Dave, and remember, the system might be rigged, but that doesn't mean you can't win. You just need to know the rules and play smarter than everyone else. I'll see you in the next video where we're going to break down exactly how to invest your first $1,000 for maximum returns. Until then, stay smart, stay focused, and keep building your wealth. Peace.